Hi, I'm Owen from Rask Australia. Thanks for tuning in to the Rask Network.
Before we get into today's show, there are a few things we have to go over.
Firstly, what you're about to hear and see is limited to general information only. It's not personal financial advice like you'd get from a financial planner. Also, it's important to remember that past performance is not indicative of future performance. That means that anything that's happened in the past, or we say today, is not necessarily going to reflect what happens in the future. Lastly, please consider that any of the guests or myself are featuring on this program may have a financial interest in some of the products or shares mentioned. That's enough from me. I hope you enjoyed today's program.
Hello and welcome to this special video update. My name is Owen Raszkiewicz. In this quick video, I'm going to show you a few different ways that you could invest $10,000. And in fact, ways that I would consider investing $10,000 if I had $10,000 right now. Why am I saying $10,000? Well, a lot of beginners try to start investing with around about $10,000, but also it's a pretty good lump of money if you are looking to, invest for the long term and one day grow that $10,000 into, who knows, maybe even $100,000 or more over many decades. So why would you be investing $10,000 in one lump sum? Well, I don't think there's really any good reason why you would invest $10,000 all in one go if that's all you had. What I would do would be break it up into smaller pieces. So let's say you set yourself a plan over the next 6 months that you're going to invest anywhere between $1,000 and $2,000 a month, whatever the market might be doing, whether it's the stock market, whether it's the property market, if you're saving for a home or something like that. Which reminds me, if you are using this money for a house deposit, don't invest it in the share market because that's a pretty bad place to put money in the short term because it's so volatile. Let's take a hypothetical situation. Let's say we have a person named Susan, and Susan's really lazy. Let's call her Lazy Susan. Susan does not want anything to do with the share market or stocks or investing or anything like that, but she knows that she needs to get ahead for the long term. What Susan could do is invest in an exchange traded fund, otherwise known as an ETF. An ETF is available on the stock market just like any other share that you could invest in. You just open an online brokerage account, you find the ETF that you want to buy, you click buy and you invest the money. ETFs are good because they can be low cost, they can be diversified, meaning your money is spread over many individual shares or other types of investments, and you can invest not only in shares, but within the ETF, you can invest in other things like property or bonds or cash or term deposits, different currencies, commodities, those types of things. Pretty much everything you want should be available inside an ETF in one way or another. Just be mindful that you check the fees and watch our other videos on how to understand ETFs and how to go about choosing them. You'll also find links further down the video to understand more about what exactly an ETF is. The second thing you might do is you might have that lump of money and you might put it towards a property. Obviously you can't invest in property with just $10,000, at least not in Australia. So what you could do is you could invest it in a high interest savings account for the next 1, 2, maybe 3 years while you save up for a house. So you can use that towards your deposit or something like that. Remember, I'm not saying to put this money into the stock market because the stock market is quite volatile. The final thing you might do with your $10,000 is you might do what I do, and that's invest in a mixture of ETFs and shares. And this is what we would call a core and a satellite approach. A core, think of a core like the strong defensive part of your portfolio, which is the stronger, bigger bit. And then you have the satellite part of your portfolio, which is where you have a lot more of the higher risk investments. Maybe you have some individual shares in there. So what might this look like? Well, you might find, say, 5 defensive ETFs. Low cost, meaning their management cost is below 0.5% per year. They're large, so they have over $100 million already invested in the ETF. They provide exposure to the really important markets like Australian shares, international shares, maybe bonds, maybe property, and maybe cash. You can invest in all of those things with an individual ETF. So you might get, say, 5 ETFs, and you might put the majority of your money into that. I have a few ETFs in my portfolio. They're all very low cost, and there are many different ETFs available online. We'll put a link below the video so you can go and you can search for your own. Then what I do is I then start to invest a small amount of money in individual shares. Now, this is not for everyone. You could just invest solely in ETFs, and that is perfectly fine. Just remember that these are all long-term investments, 10 years or more. You should not need the money anytime soon. They will go up, they will go down, they will go sideways. Some might pay a dividend, some might not, but that's okay. You've got to be prepared for that. The other part of your portfolio, which is the satellite part of your portfolio, think about it like a moon going around the Earth, or think about it what I call tactical positions. So these are positions that you take that might only be a 5-year view or a 3-year view, but you might identify some shares, such as like some small cap shares, some large cap shares, some dividend paying shares, or even some international shares, which you can buy in your brokerage account alongside your ETFs. And you might have, say 80% of your money in your core defensive bucket to begin with, this core, stronger defensive part of your portfolio. And then you might have 20% in this other side of your portfolio where, I guess, if you're like me, you like to have more excitement in your investments, you might stick that in the 20% bucket, but you know that you don't really want to go over that anytime soon. Then let's say after maybe 3, 4, 5 years of investing experience, you feel like you're pretty confident. Maybe you're ready to invest a little bit more of your money in this 20%. But that doesn't mean necessarily taking money out of your core bucket and putting it into your tactical or satellite bucket. What you would do is pretty simple. You would just dollar cost average. You would add more money. So even though we're starting with $10,000 today, and you might put more in this one and a little bit less in this one, what you would do over time is you would keep adding to both. And you might start adding 50-50, as in, if you save $1,000 every month, you might put 500 here and 500 there. Or if you're saving 2,000, 1,000 here, 1,000 there. Or you might mix it up. You might say, I'll put 1,500 here and 500 here. So, in summary, what would I do with my $10,000? I'd probably do exactly what I'm doing already. That is, find some low-cost ETFs or exchange-traded funds. Many of these use an indexed fund strategy, and we've got links below where you can find out more about index funds. So I'd have the majority in there because they're easy to manage and you know what you're getting. And then maybe once I build up some confidence, I keep learning and I understand investing, I would start to put them in individual shares over here. Obviously not as much. You are going to make more mistakes over here than you typically would over here, and that's perfectly okay. Don't confuse share prices going up and down with actual risks that happens inside the business that your share represents ownership of. So that's a lot to take in one short video. We have lots of resources further down this video. That's how I'd invest $10,000 today, or $20,000 if I had it already. It's exactly like you would do maybe inside your super fund. You could just look at the strategies that are inside your super fund and then apply them to your own brokerage account as well. If you need help getting your brokerage account set up, there is another video on that below this one. I'm Owen Raszkiewicz. Thanks for tuning in.